Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 3rd of September. Now this week we've not only got the usual economic news that we have to deal with, so such as things like Aussie interest rates that are due out tomorrow, non-farm payrolls that are due out on Friday, and a number of other news announcements, fundamental news announcements that are going to come out throughout the course of the week. But there's also things to keep a focus on, and that's things like the escalating trade tensions between the US and China, and potential sort of trade wars that are being bandied around about that. And on top of that, even perhaps Canadian tensions there as well with that sort of trade deal. We've also got things closer to home here in Europe as well going on. So the Brexit negotiations have also come under focus again, and even the possibility of a sort of leadership sort of contest within the government as well. So plenty there to keep a focus on. And some of this, of course, is not going to be news that's going to be scheduled into the fundamental calendars. So keep an eye on any news announcements around those events. So let's take a look at some of the markets here that we can take a look at, and some of the markets that we're going to be keeping a close eye on in the trading room. The first one here is Great British Pound against the yen. Now, the yen has been increasingly strengthening in value over the sort of past few weeks, and the Great British Pound hasn't been doing so well. And we can see here that pound or sterling has been declining against the yen here, and it has been historically typically a volatile currency. And again, that doesn't help because of the volatility behind the yen. It doesn't help because of the volatility behind the sterling market as well. But for us as traders, being on the right side of this, of course, does present plenty of opportunity. Now, the reason this is one has caught my eye at the moment is because this morning I was looking at this and the market has just sort of been breaking 143.80 up here within the context of this downtrend. There was some key support around sort of 143.23 and 143, which I was particularly sort of interested in. The market here is now sort of breaking through that support sort of quite nicely. Now, the reason I like this to the short side, of course, is because this sort of level, this area of support here, if I open this up here on the 4-hour chart, this sort of area of support is the last sort of area before the market sort of gets down to these sort of old lows down here. That's around sort of the 140 area. Now, 140 is a key level on this market as well. So we can see that the market, let me just mark in 143 as well. So 143 just above, so just around here, where we can see that the market's found resistance, support here many times. The market's just around that area at the moment. Today we had, early this morning I should say, we had weaker than expected PMI data coming out of the UK. That hasn't supported the sterling at all, and that's now sort of led to this market sort of breaking down to the lower level. So I'm looking here for lower prices. If we can get lower prices, you can see that clearly underneath 143 there's not a lot of potential sort of support in the way. Maybe looking for a move down here to 140. If we come up to the higher time frames and take a look at this on the macro picture, so taking a look on the weekly chart, you can see that on the trend structure here, just from a technical perspective on the weekly chart, this makes sense. So we've got lower highs, lower lows, we've got moving averages in the right order, we've got convergence on the indicators. The market's just sort of pulled back up into 145, it's rejected at 145, which happens to be in that moving average zone, and now we're starting to get bearish price action coming back in. So if this is going to continue, this trend is going to continue short, then I think sort of 140 is quite a reasonable area for sort of a first area for this trend that needs to test, and then possibly beyond that as well, maybe sort of down to the sort of 135 area and beyond. So I'm liking Great British Pound yen as long as the market can continue short below this sort of 143 area. Let's have a look at a couple of others. Now, I always like to look at a range of markets when we look at the markets to watch videos. So let's have a look at the indices. Now, the US indices or the US stock markets are closed today. So the stock indices here, the futures contracts are open. They're in overnight sessions at the moment, but be aware that the stock markets, the US stock markets, are closed for Labor Day today. Having said that, from a structural perspective here, these markets do look strong. There's no denying that they're in clean uptrends. The moving averages are in the right orders. There's sort of convergence on the indicators. So all of the sort of technical factors are sort of sitting there. And at the moment, the market's now sort of pulled back into the moving averages here, as you can see on the daily chart. We've got some rather interesting sort of price action here. And if the market can sort of break above the highs, continue above these sort of highs of yesterday's candle, which is around that area at the moment, then I'm looking here for the trend to continue. That's going to mean that we're going to start to see high above here, above 26,000, possibly even by the end of the week up to, if the trend continues, possibly up towards sort of 26.5. Now, when I look at the US indices, I always like to compare against the other US indices as well to see if there's any sort of divergence and disagreement between them. So the S&P 500, let's take a look at the futures here for the S&Ps. They're very, very much the same structure here as the mini Dow. So they're still looking bullish too. And if we come and have a look at the NASDAQ is also extremely sort of bullish. We haven't got the sort of pullback into the moving averages on the daily chart on the NASDAQ, but we have got sort of quite a nice sort of sideways consolidation on these mid-time frames where the market's just compressed into those moving averages. Again, for these trends to continue, there is only sort of one direction, and that's sort of higher. Now, that's no guarantee, of course, but it's the sort of path of least resistance at the moment. So let's take a look at our favorite sort of commodity at the moment. And I was debating whether to discuss gold or to take a look at oil. Now, oil has sort of just pipped it here for me for the Markets to Watch newsletter, although would be worthwhile keeping an eye on gold short as well throughout the course of the week. Taking a look here at oil. Oil has been an interesting market that we've traded many times in the trading room. The market now has rallied on over the sort of past couple of weeks, and we're now back up to the sort of levels that we've been looking at for breakouts long, which is the sort of 69 area, so 69 sort of 73 to be precise here on the 4-hour chart. So from a weekly perspective, let's just open this up. From a weekly perspective, we can see that the market is in a strong uptrend. The market has now put in a higher low. We're now sort of reaching up. And if I'm just by looking for a trend to continue, this trend needs to move up towards sort of 73.5 in order for the trend to continue to make a new high. So that's still quite a reasonable move to the long side. From the daily chart, we've now got a very strong move to the long here. We've got a key structure level that's formed at this sort of 69, sort of 50 area, as we can see. And the market's just sitting on top of that at the moment. So, if the market finds support here, then we can see some extended prices long as well. Again, there's still convergence long and strong convergence on the indicators. If we come to the sort of 4-hour chart and the 8-hour chart here, you can see that the market's pulled back into the moving averages. We've got sort of small bullish candles sitting here in the moving averages at the moment. Again, continuations of this trend, so breaks above the highs of the sort of current candle structures would be good support for this market to the long side, and then we could be looking for positions up towards that sort of 73 area, which will be sort of pushing up towards these highs, and that's going to be so quite a decent move to be able to capture some of the price action. So there's at least 3 good markets that we're keeping a close eye on in the trading room this week. I certainly sort of hope it helps, and look forward to speaking to you next week. Bye for now.